Boom, we are alive, ladies and gentlemen. We are going to be taking a look at Bitcoin, Ethereum, Cardano, Solana, Link, Fetch, and Avalanche today. But before we do that, big deep breath in and out. Be relaxed. There are tons of positions and potentials that are right ahead of us here. So don't try to rush into anything. Make sure you know what you're doing, and your trading time here is going to go well. So we're going to start with Bitcoin. So anyone who's still bearish on Bitcoin at this point or talking about distribution just doesn't know what they're talking about. And you should never really listen to anybody. You should always try to encourage yourself to better understand what's going on. That way you can make your own decisions. And if anything goes wrong with what you did, you only got yourself to blame, because no matter what happens, that's going to be the end result anyways, is you did something wrong. So best to be as educated as possible. So right now, one of the reasons why we've been so bullish is because for the last, 300 something days, Bitcoin has been moving through this accumulation range, somewhere around 240 to 300 days. What we just recently had was this first set of SOS and last point of supply. So in the Wyckoff method, which is what we're using here, you have a spring, which is noticed by the significant amount of volume. The first test, a micro SOS, or a micro sign of strength, an LPS, which means last point of supply, a sign of strength, a last point of supply, a sign of strength, and a last point of supply. Here, we're moving finally into the major sign of strength. Now, generally what I suspect is going to happen, we are actually going to run up probably much higher than most people think, maybe upwards as high as 45 to 47, maybe even upwards of $52,000. And I think what Bitcoin's going to do here is I'll draw it in so it becomes a little bit clearer for everyone. I think we're going to do something like this, and then we're going to start to form a reaccumulation range here, a much bigger one. Now, when we were way back here, what I thought we might do is rush up to around 40,000 and then come back down and form a larger trading range here. So there's two big possibilities. One, we form a reaccumulation range right here before going higher, maybe taking about 6 or 7 months for the reaccumulation range in Bitcoin to take place between 32 and 48,000. Or we rush up to 40, we hit 42, and we come back down to around 27, 28, and we form a larger pattern here. Now, one of the reasons why we're making this assessment is because when we've looked, and let's go back to the chart that we had drawn up for Bitcoin in 2020. Now, I have not changed this chart at all since 2020. This is exactly the same. And one of the things that we were looking at was how this secondary trading range took place inside of this box, but how it was actually part of a much larger trading range here as well. So this is what's known as scale invariant. You can find trading ranges at every single time frame, but they're just more reliable on the larger time frames. And what you'll also notice that right around this line here, this yellow line, which we have drawn, the top of the $20,000 2017 high, actually became the backup point before the massive breakout. So once you have these moves outside of the trading range, they're very bullish, and you don't generally return back to the bottom of them. As you can see here, the previous bottom of this reaccumulation range is exactly the bottom of where we came to prior as well. So, and it marks that bottom almost perfectly. So what I want to do then is clear the error of understanding, because if you compare the 2017 high to this high, and we'll go to the next chart, the primary support and the selling climax maybe do about here. We could be building a secondary trading range, and I suspect that's the case. But where effectively that trading range, let's go back to where we are with today's charts, where that trading range starts to form is it's not determined yet. So again, there's two likely scenarios here. Number one, we form basically a larger reaccumulation range right out the back. I hate when I've got so many things drawn. It makes it a bit more difficult to draw, but here we go. We'll do it anyways. Some type of reaccumulation range that does this in the middle of the box before going higher, or a larger mid of the range here very similar to what happened in 2017, is that there was a middle of the box trading range which took place, and that this was your primary selling climax to begin just this whole area. Now, the reason why I think the one I think is priority is actually up higher, not going down lower, maybe never seeing $32,000 again. So I'm going to go over why I think that's the case here by taking a look at Ethereum and the rest of our investment thesis. So Ethereum and BlackRock just had an ETF approval, and what you see again is another perfect within the trading range. So before we look at CoinGecko here, I want to look at our accumulation schematics. Some of you guys had asked, like, well, is a falling wedge a powerful trading range? Well, the falling wedge actually takes place within the trading range. Here you can see both phase A, phase B, and phase C mark the outside areas of the falling wedge. For this trading range here, this is an inverse head and shoulders. So again, these larger patterns, when you find them within a trading range, somewhere over the course of a few hundred days, they're extraordinarily powerful. And this is what we go over and have been going over for the last 3 years in the private bear group. It's one of the easiest ways to trade with confidence, and you rely on larger time frames instead of day trading, which just basically can be annoying and extraordinarily frustrating. But keeping this in mind, what we're actually witnessing with Ethereum is this range here. So where phase C doesn't ever actually come back down to pierce the bottom. So here we see phase C this spring never came back down to pierce the bottom before we're already starting to move in the top of the trading range. Now, what's also exciting is we've gone over this a few times before as well. These are called reaccumulation schematics. Here we're going to look a reaccumulation schematic. So a reaccumulation schematic is usually found in a much smaller time frame, and they usually indicate the very start of the bull run within the larger trading range itself. So here you see this breakout puts us right above the top, and we see the SOS and the backup phase take place here. So which reaccumulation schematic is it? It's probably this one, where we move above the box without touching below in phase C and moving up and making an SOS and a backup. Look how similar these are. Move above the box, can't get back in, and then boom, an explosion. Move above the box, can't get back into the trading range, and then explosion. These very first steps of a reaccumulation range are the indications that we are going much higher. Again, if we go to the larger time frame, it's important to note that the market maker, the larger composite operators, the institutions, took 638 days to build this range. Once we see a breakout, it is not over in a short period of time. You have to remember, if it took 638 days for that range to build, it's going to take at least half of that time before we're done. So this leads me to believe that Bitcoin isn't going to come back down lower. And this is not the only trading range that does that. I think for Ethereum here, basically as soon as we move out of the box, we're going to pierce through and run all the way up to 28 and to $3,400, and then form a secondary reaccumulation range very similar to what we're about to look at next, which is Link. So Link has already done this. Link had 500 to 600 days of accumulation inside the box. It saw a very nice, we'll zoom in here, very nice, very well-defined reaccumulation range inside the box. What's also, when I say box, I mean trading range as well. They're kind of trader lingo for the same thing. But here, let's make this a little bit bigger too, so it's more clearly identified. In the private group, we were watching this one explode, and the first reaccumulation range. Now, this one is actually more similar to where we do drag across the bottom, something like this, where we have a phase C that tries to go as low as possible within the trading range, indicated by this here. Now, as soon as we moved outside of the box, what did we see? A massive explosion in price. So just to give context again here, remember, we were in a 500-day trading range. Look at the green trading range on the left-hand side, and then the massive explosion in price that came up afterwards. Very similar to what we've witnessed today, followed by a reaccumulation range, which was quite large, which I suspect will come, and you'll see a bigger retracement here for Link in the near future. But more importantly, on the 15-minute, look at how this second reaccumulation range outside of the box became a very powerful indicator for the potential to take a very high confidence trade and enjoy the rest of the run outside. So again, here we'll compare. Here's a reaccumulation schematic. We've already moved up, knowing we're in a strong uptrend. We've moved through phases A, B, and C. We tried to test the bottom here, notified by this break. We could not go back, and we started to move up and out of that box. Now, again, since then, we've had almost a 40% increase in Link. So for those of you that are in the private group, you guys are already killing it. If you didn't take the Link trade, there are more of these to come. But I just want to show how high the level of confidence can be, because within this range, it was only a 10% spread. That's extraordinary. Basically 600 days of boring price spread to know that within a very short period of 12 days, you have the potential to make an amazing trade with a very high level of confidence. It's very rare that you get to do that. And one of the reasons why I love this type of trading methodology is because you can be patient, wait for high confidence signals to allow you to then make that trade. So let's take a look at Solana. I know a lot of people in our group are in this trade as well. Solana actually looked very similar to a falling wedge pattern, although we had a huge dip, which was likely the fear of the. Well, actually, let's do something here and make some conjecture for fun, because it's always fun. It actually maybe looks a bit more like a head and shoulders. So the larger pattern that we're noticing is here's the left shoulder, here's the right head, here's the right shoulder, and then the breakout pattern. So take a look, head and shoulders, breakout pattern. Right now, what's interesting is most people think Solana is done. It's just getting started. This reaccumulation range right here is actually 2. So this is what I mean by scale and variance. Technically, this is a smaller reaccumulation range to the right side of the shoulder, which is one of the reasons why you could have been an accumulation process here within this trading range. It was very well defined to enjoy the rest of this run. Now, again, as we zoom in, look at how well defined this trading range is. And these technically these are both reaccumulation ranges, although they're not as easily definable. Reaccumulation, both within the box. Again, very similar to with what we saw with Link. Big reaccumulation range within the box, and then the final breakout. So where Solana is right now on the larger time frame, it's just getting started still. Now, if you didn't enter a trade, I would wait for Solana to create a secondary trading range here. It's very likely that what you're going to see is a trading range somewhere outside of the box here that goes like this. Now, what I want to do is take a look at what that's like in Fetch, because Fetch is doing exactly that. So Fetch is a step ahead of Solana, where it's already done that. So here we see the accumulation range taking place. I'll better define it here with my secondary part of the range. Notice the start of the spring. Let's see if we can figure out which this one is. This one actually looks much more similar to this here, where phase C couldn't come all the way back down to the bottom. Really well defined spring as it pierced through the bottom of the trading range, showing that the selling was exhausted, and then the move outside of the box. If we get a little bit closer on the 45-minute, we can in fact see that there was only a very short, not very well-defined accumulation range right here at the top of the trading range. Now, what's about to happen next is Fetch is going to explode. Fetch is probably going to go to a 30 to 60% run. Now, this is a very well-defined and well-timed trade, and if you know what you're doing, you can make life-changing money in a very short period of time because of the level of confidence that we have when all of these indicators and all of these changes of character are coming into the market. It's not just Bitcoin, it's not just Ethereum, it's not just Solana or Link, it's many of these places where we know with high confidence we can take a position and enjoy the ride with very little room for downside because of how well defined these trading ranges are. So again, for Fetch on the larger time frame, big beautiful accumulation range, multiple hundreds of days. And then on the shorter time frame, already outside of the box, which is what Solana is about to get to, what Link has already completed, a beautiful trading range starting to take place. And the first SOS outside of the box, I suspect we're going to get a retracement here on the 45-minute to retest the RSI, and then a massive explosion in Fetch's price, where we could, Fetch could really go for a big run here. It's been the convergence of AI and crypto, it should not be underestimated. I think it's, here we go. Sorry about that. I know I missed some of the charting there, but I'll just say it again. A big reaccumulation range followed by, on the smaller time frame, this beautiful trading range that's been taking place right here, or a beautiful reaccumulation range that's been taking place right here. So just an FYI, I have a big trade here already, and it are clearly in the profit. Everything below this pink line is my accumulation. I purchased multiple times as soon as the 15-minute RSI hit, which is basically these blue checks below the RSI range here. So I'll go over two last ones for you guys. And remember, for all of you that are new to this kind of stuff, the sickness of the modern investor comes from lack of education and overtrading. And the cure for that is to join a group or a community that already knows what they're doing and helping one another. If you haven't yet, join our private group by going to arcanebear.com/private. There's no risk involved, because if you sign up and you're not happy at any point within that month, we'll give you a refund. There are very few people that are unhappy, and this is the value that you can get from this right now massively exceeds the price point, because of how much money can be made when you have this high level of a confidence in the trades that you're making. Whereas you've got people like Capo Crypto who have clearly no idea what they're talking about, who don't know anything about the Wyckoff method, and are going to continue to be wrong because they don't know anything about technical analysis. They assume fundamentals are good. They're not. There's this old saying, when there's blood in the street, go long. I've created a new one. It's when people start dying, you should start buying. And I've been talking about months of excess mortality for a reason. So I hope that you understand that. When you see war, go fucking long, ladies and gentlemen. It's so counterintuitive, but it works. And it's worked for a long, long time. Okay, let's take a look at Avalanche. Some of you guys had asked questions. We're a big fan of Avalanche here. And I want to show, again, what these look like. Again, when you're looking out in the wild, the accumulation ranges are not identical, but they're pretty damn close if you find the footprint of a bear compared to another footprint of a bear. They're infinitely different, the same way one pine tree is infinitely different than another pine tree, but they're both pine trees. So here we go. We can see Avalanche has just completed the breakout and is about to go through the test range here in phase D before moving all the way to the top of the box. There's a very high certainty that Avalanche is going to run almost 120% within the next, let's say, month. Now, how do we find the place to take a position? What you're going to find over the next 24 to 48 hours is that, well, first off, this is, some of you will recognize this, this widening little megaphone that was taking place. But more importantly, because that's a whole different level of skill set, what we want to keep an eye for, if you haven't taken a position, is some type of reaccumulation range, some type of trading range that takes place. Find entries as close to the bottom of that trading range. It will give you usually 1 or 2 tries to get in when it's this early. And then you've got a massive move, and probably still higher, because again, look how early Avalanche is. Now, I actually much more prefer trading things like Link that are already outside of the box, that have already shown that massive strength indication to leave the trading range itself, as in comparison with Avalanche, who's still at the bottom of the trading range. In 2020, when I was figuring this stuff out and screaming for everybody to go long, I would try to make entries the test here, not recognizing that if you already have something that's showing an extraordinary amount of strength, wait for it to form its trading range and re-enter on the reaccumulation ranges, because it's going to outpace the other markets. The market has already indicated it likes this particular asset as a leader, and it's going to keep doing that. So jumping in early, because this has not gone to the top of the trading range here, feels smart, but for me in the past, it's worked out better to follow something like Fetch that's already out of the box in a reaccumulation range and about to make new highs effectively. So although I think Avalanche is still a great asset, I think it's going to perform well here. The fact that it's underperforming by not having already left its trading range is an indication to me that either the market just doesn't know how awesome it is yet, or market participants are not interested in Avalanche yet. Now, fundamentals could be amazing for it in the future, but as of this moment, the market hasn't realized how amazing Avalanche is. So I'm not saying it couldn't be a face melter. Again, we still own Avalanche from our previous investments, but in terms of like taking trades where I'm going to get in and out of the market within the next 180 days with something, I wouldn't. Whereas in terms of venture capital, I think Avalanche is still an amazing play. So lastly, as I told you guys all, Cardano I wanted to take a look at. Again, it's within the trading range. It has not left the box yet. So there are other assets that are already on the move, like we showed with Link here. Even though Link was already, let's just check here on our gap up. Even though Link was already up 50%, the ballsiness to know that, oh, this little trading range here that's forming is going to send us even higher faster, up another 40%, as in compared with Cardano, who's in the box from the very bottom, only gone up 50%. Why did we know that it was a higher confidence trade to get into Link and take the trade there instead of to enter into Cardano, who's again not outside of the trading range yet? So this is the kind of stuff we go over. We've got really detailed explanations, PDFs. It gets drip fed to you, so you're not all dropped in at once. We've got a private group with hundreds of members who go over this. So remember, the disease and the sickness of the modern investor that they get wrong is they overtrade, and they have a lack of community surrounding them that help them know when and what to do. If you want to solve that, join our private group by going to arcanebear.com/private. And the skin in the game of having someone having pay means you know you're going to do the work. It's just helpful for you. So we would open it up free. We do have a free newsletter. You can go to arcanebear.com and sign up for that. But we've found over the years that people don't action unless they have some level of skin in the game. And the amount of money that you can make from getting this right is just so significant. And again, with no risk, you sign up. If you're unhappy, you think what we're producing is not useful material, we'll give you a refund, no questions asked. So why not try it out? arcanebear.com/private, or just sign up for the free group. We do send out newsletters maybe once a month to the free group too. Anyways, it's the Tio with the Arcane Bear. I hope you guys enjoyed this episode. Breathe in and out. Be patient. There's a ton of money to be made right now, especially if you know what you're doing. We'll see you guys again on the next episode.